Well, welcome to our October Economic Update. I'm John Cleaver. This is Dennis Bacon. We're with Beyond Wealth Advisors. We're here for the October edition, the first monthly economic update of the fourth quarter of 2021. Yep. We're excited to be back and look forward to sharing some good information with you today. Well, we're going to start with a real big question.
Really big?
Really big. Okay. What's the elephant in the room right now?
It's football season?
It is football season.
That's not the one we're talking about.
That's not the one we're talking about.
Well, if you watch the market at all, you know that the market has been down. Right. Currently, we're down a little over 5% from our September highs. Okay. And, really, it's about the first time we've had a 5% pullback since last October.
Right.
We discussed this in our prior updates. And, this is not unexpected.
Exactly.
Matter of fact, we were fully expecting to have this type of pullback at this point in time.
Sure. So I'm guessing that some clients might be asking, well, how low is it going to go?
Okay. Well, the average pullback that we see during these type of pullbacks is somewhere between 8 to 15%. Every year, virtually every year, we have a pullback of somewhere between that 8 and 15% range. And right now, the technical support levels at the low end would put us right about that 8% range, around 4,100 on the S&P, somewhere in that general area. It could go lower.
Right.
I think we could go to 38 or 39. I'm kind of a little bit outside the scope of what a lot of economists are saying out there, but I think we could go that much lower. I think it would go lower really on an emotional reaction more than anything else. But that would still put us at 10% from where we are today. But even there, we would still be a 20% increase from where we were a year ago.
Right.
And higher than pre-pandemic highs. So,
sometimes hard to keep that in perspective. Yeah. So obviously market volatility isn't anything new. We've experienced that through the years. And as you mentioned, it's common to have a pullback of this size from time to time. But why now? Why are we experiencing this particular pullback at this point in time?
There's one thing is that we're just due for a pullback.
Right.
It's just time we did.
Right.
We still have a little bit of COVID things going around with Delta, and we're not sure what the next winter will hold for COVID. But I think in general, most regions of the country have in place the way they're going to address COVID. It's not going to be the same in every part of the country, but I think most places have a pretty good idea of that. There's a couple other things going on. We have a little brinksmanship going on in Washington.
What? Washington?
They don't seem to want to agree on anything. I can't.
What's going on in Washington?
But I think there's probably a lot of that is just a little upsetting for some people, and it's pretty typical around this time. The other couple of things that are really impacting it are a little bit more financial. The Federal Reserve is giving all the signs that they're going to stop their they're going to start tapering their economic support levels, which they have been, buying up bonds and doing a variety of things, and they're really going to start tapering that back in preparation for interest rates going up at some point in time in the next couple of years. And the last thing that we're really seeing that kind of flies under the radar for most people, there's a lot of problems going on in China. As far as the economy there, it really has not been doing very well. There's a company over there called Evergrande that is the second largest developer in China. And China's a big country, so that's a really big developer.
Right.
And it looks like they're going to miss some of their debt service payments going forward.
Right.
And we really don't know how that's going to play out, but that is certainly concerning from the macro view of what's going on in the world economy. And that's upsetting to some people. So there's 4 or 5 different things out there that are not.
Is that the whole China conversation? Is that just more of like a trickle down, like it impacts so many other things that in and of itself maybe not huge, but there's so many things here in the U.S. that are connected to that?
A little bit of it's that. A little bit of it is the fact that China is so guarded on all the information they have that comes out of China, and you can't really trust all the information there. Even just from a general accounting standpoint, their accounting standards are nowhere near what ours are. So there's a lot of uncertainty about what profitability is, and it's really what you don't know.
Right.
And so when you have negative cash flow out of an I don't know situation, you wonder how negative it really is.
Sure.
So.
All right, so we know we're in a pullback. got a little bit of idea why it's happening now. Let's flip the script a little bit.
Okay.
What's that outlook look like as we roll here to the end of the year, roll into 2022? Just maybe some snippets of what 2022 is looking like.
Well, yeah, as we go forward, we're looking at, we're seeing, the labor force is slowly improving, but there's a little reluctance because of COVID, because of people finding child care, and also a lot of people are having early retirement. They've decided, okay, we're done, if they are financially capable, and so we're seeing a lot more of that. Consumer spending, though, is great.
Sure.
Consumer spending is actually 12% higher than it was pre-pandemic. And I think that's a lot of what we need to look at. What were things pre-pandemic? Because you look at changes in the last year. Well, the last year was bad, so what that really mattered. But pre-pandemic is really up about 12%. Right. That's where the trend is. Capital investments are up. Right. Companies are very profitable right now. They're taking this opportunity to invest in the companies. And actually the labor shortage is driving that too, because they're automating and doing things so they have less employment need. Right. And so that could create some long-term things on the employment side, but on the capital expenditure side, which is great for the economy, is really good. Manufacturing is trying to get stronger right now. It's being hampered by the supply chain issues, which is probably the biggest worldwide issue right now, is all the supply chains. Right. Housing demand remains strong, but again, they're being constrained by both labor and supply chain issues. Right. So we have a lot of constraints on the growth of the economy, mostly due to these outside influences and things that are going on that are as a result of COVID.
Right. Awesome. Well, that generally sounded positive.
Generally, yep.
Okay. So I'm sure there's a couple risks involved and things that we're maybe keeping a pretty close eye on. Anything out there that you're thinking about?
Well, a couple of things are, the one that everybody kind of talks about is inflation.
Sure.
There's a lot of discussion. Is this transitory inflation? Is it long-term inflation? A lot, because of the supply chain and production bottlenecks, it's causing the inflation. That's mainly what's causing the inflation. There's a little bit more sounding out there. The inflation may be a little longer term than what some of the prognosticators that you hear on television are talking about. Right. But not in the era of what we had in the late 70s during the Jimmy Carter years. Not that type of inflation, but a little bit more like we probably had in the 80s and different time periods where we've averaged 4, 5, 6%. I think it's a possibility. I think we've talked about that in the past. The other thing, though, that's a little bit of an unknown is what we call monetary policy. What the Fed does. Right. Now, there's an old saying is don't fight the Fed. Right. When the Fed's loose with money, understand you're going to make money. Right. When they start tightening things, how far does it go? Where do long-term interest rates go? Is there a reduction in this fiscal stimulus they're doing? How's that going to impact everything? And what's the upward pressure on interest rates? So those are a little bit unknown. So those are some of the risks that are out there right now.
Makes perfect sense.
So that's kind of where we are. In general, we feel pretty good about the economy. Has a lot of strength. It just has these headwinds of labor and supply chain bottlenecks. Right. Well, and by the way, on supply chain, I still haven't got the part for my blower that we got, my leaf blower.
That we talked about last month?
About a couple of months ago, yeah. Still haven't got that part.
Well, you'll be putting that away here before too long anyway.
Probably.
So, well, thank you for tuning in again to our monthly update. We certainly appreciate the opportunity to serve you, and make sure that if you have questions or you want to follow up with any of the topics that Dennis shared today, to reach out to your advisor at Beyond Wealth. We certainly appreciate that communication back and forth, and we look forward to seeing you again next month. It'll be November.
That's right.
All right. Have a great day.